It's time to talk property, thanks to our friends at Property Apprentice. A tax time is coming and new build investors may be scratching their heads wondering when they reap the pot of gold tax rewards. Debbie Roberts, founder of Property Apprentice, joins us now with more. So yes, it's coming up tax time and there's new rules in place. What will this mean for property investors?
I think for the majority of property investors who owned property before the 27th of March last year, it's going to make little difference to them because they'll still be able to deduct about, 75% of the interest on their mortgages up until the 1st of October last year. They'll be able to deduct 100%, but from the 1st of October through to the 31st of March, it's 75%. So those investors are going to notice a little bit of difference, but nothing significant. I think the ones that are going to get the biggest surprise are the mum and dad investors who've bought new builds because of the tax benefits, because that's been well publicised. And I think one of the things that most mum and dad investors don't know, based on the conversations that we have with people every week, is that they don't realise that those tax losses are ring-fenced, and they've been ring-fenced since the 1st of April 2019. So yes, you can still deduct 100% of the interest on the mortgage on a new build investment property, but you don't get a tax refund. Those losses get carried forward into the next financial year, and most of the new builds are horribly negative cash flow. So
Right.
yeah, some of those investors might be waiting for their tax refund and they're not going to get it.
Right, so there's been a lot of hype about investing in new builds, but potentially a lot of people who are going to learn this lesson the hard way.
Yeah, unfortunately, and it's one of those. It's a really complicated change in the law, and my personal opinion is it was the worst possible time that a government could make changes to affect property investors, because we're in the middle of a rent crisis. So like private landlords make up 78% of, no, 87%, sorry,
Wow.
87% of tenants in New Zealand rent from a private landlord or trust. We're
Wow.
in the middle of a crisis for rents, and the government makes these sweeping changes. So this is another one of those unintended consequences. But to be fair, they should have known better, because they had their advisors were advising them against it. When the Minister of Housing and Development tells you it's not necessarily a great idea, and the Inland Revenue says don't do it because it could undermine the tax system, you've got to wonder why they decided to push ahead with it anyway. So yeah, and we're seeing the results of that now with rents skyrocketing, all these changes happening at once at a time when people can least afford it.
Absolutely. Debbie Roberts, Property Apprentice, founder and CFO, thank you so much for joining us, and that was thanks to our friends at Property Apprentice.